You need a great opener, like somehow we're adults. Do.
We can record that right
some
now.
Some kind of like.
We can record that right now.
Everybody be quiet.
Somehow we're adults.
So, I wanted to do this podcast. Obviously, it's been 2 years since you've done this podcast, and you and I never have what seems like enough time to do one of these. So, in every time we ever talk, it's like we just don't have enough time to actually sit down and talk about things because it's at family gatherings or, in passing, and it's, yeah.
Life gets in the way.
It does.
But we seem to find a way somehow or another and on occasion to do it.
Yeah. Yeah, and that's why I like this specific setup, because we could talk for an hour unobstructed by wives and dogs and the whole life in
the
general.
rest of life.
Yeah,
yes.
We can actually plan for it and schedule it. It's like this is like a doctor's appointment. It's just a different kind of doctor's appointment. Right? It's one you look forward to.
Absolutely.
So I wanted to nerd out for a little bit, and I know that you're one that likes to nerd out with me and talk about like the stock market, the economy, stuff like that. So as far as that is concerned, so you sent me some videos or a video to watch, and I sent you a video to watch in preparation for this.
Yes.
You sent me, I guess it was like an update from the Vanguard.
It was a beginning of the year forecast for 2024. That Vanguard, I watched the live webcast,
right?
And where they were trying to give you a vision of kind of where we are right now and what it looked like going into 2024.
It was the CEO and chairman,
yep,
on one side, and it was like, I guess the CIO, the Chief Investment Officer.
Yes.
Who I guess his title is CIO and CFO.
Yes.
So, but it was basically like they did a podcast, which is what I really liked about it.
Yes, it was kind of cool. Yes.
Yeah, but they had it set up like a newsroom, which I thought was a little strange. Because I'm like, you guys aren't the news, like the way it was set up. But honestly, the conversation was great. They really broke it down, and they talked about it like how pretty much how like you and I would. Obviously, they did it a little bit on a different platform, but they talked about it at a reasonable level to where people could, still understand what they were talking about. If they started to talk about something, they'd be like, let's talk about what that means, kind of thing. So,
well, and Vanguard, I think, is real in touch with who their customers are. Whether it's self-investors, it's people that tend to have a little more interest in their returns, and that's why their claim to fame is the low cost investments, and that tends to tap the average man on the street, I think, a little bit more than some of the other big names, and Fidelity or BlackRock.
Yeah. They're the long term guys.
Yeah,
their market is long term because I know for me, let me turn my mic up a little bit. I know for me, like what made me stick to them is I watched a lot of Jack Bogle, who is the founder of Vanguard. I watched a lot of his videos, and learning about, because he's basically the one who coined index funds. So, do you want to go in a little bit further and explain like what an index fund is versus mutual funds?
Sure. Well, an index fund, most mutual funds are managed by professionals. A professional has an idea, puts together a group of stocks that they want to buy into to create a well-rounded product to put out on the market. So that,
and by product too, I mean, just to put it in super simple terms, you're talking about businesses. You're buying shares of stock, which is a part of, you're owning part of a business.
That is correct. And actually these larger mutual fund companies are actually driving the market now because they own so much of the market. And so Vanguard, Fidelity, they own a significant amount. They literally can drive what those companies do based on owning so much of their stock.
Right. Yeah. BlackRock. A lot of people are talking about BlackRock, State Street, and Vanguard, because those three own the majority of most companies.
Yes. And so what Vanguard did is said, well, we think that instead of having an expert that we're paying big bucks to determine which stocks we're buying for our mutual funds, then what we can do is just mimic the markets. So like the S&P 500, the Standards and Poor 500, they take a same breakdown of what's the stocks in that market that are being tracked, and they mimic that percentage and create a index fund that just follows that standard.
Yeah, it's not got an actual manager. It's really just, I think the only expense you pay for is like the actual. If you ever looked at the breakdown of the expenses and what you're paying and what it goes to, it's basically like clerical work.
Yes.
It's
Because you're not paying any experts at that point,
right? Because people who manage those funds get paid a ton of money, and that's their biggest fee.
A regular mutual fund's going to charge you, in many cases, let's say 0.5% to 1.5%.
I think standard is 1%. Yeah.
Yeah, to manage a fund, and then you got Vanguard coming in here at 4/100ths of a cent.
It's 0.04.
0.04. Yeah. To manage the index fund.
Which, when you take in long term, when you take into account, if you just look at percentages, most of them long term are going to be close to what an index fund would get. And most of the time, index funds are even more than most of those managed funds. And then when you take into account the fees cost, you end up making more long term. That's what I want to specifically focus on with index funds, is they typically do better long term.
Yes. Because I'm even starting to see some significant differences in mine just based on like, for instance, what I'm managing myself versus what I have Vanguard managing, and I'm outperforming them purely because I'm not paying any management fund for mine, and even though, or minimal management fund, should I say, that 0.04% versus they're charging me about 0.35% to manage a group of funds for me. And that's it. Instead of mutual funds, we're actually into ETFs, exchange traded funds.
Right. The three main ones are index funds, ETFs, and mutual funds.
Yeah. Well, and now my ETFs, really your ETFs are more or less a type of mutual fund or index fund.
Right.
And so well,
the difference is when they can trade. So so mutual funds trade at the end of every day.
Yep.
And ETFs can trade at any point throughout the day. But besides that, they're the same thing.
Yeah, and so you can, with an ETF, you can take advantage of the funds, the stocks moving up and down throughout the day, and
because a news article coming out about Tesla's shares being down can make their shares go down further.
Yes,
it's as crazy as that too. And if you have to wait till the end of the day to trade that, so typically people with that preach on mutual funds, they go, because when they're typically mutual funds ideally are a longer term idea. When you buy a company, it's not because you're hoping it's going to go up tomorrow. It's because you're hoping it's going to go up over 30 years.
Yes.
So,
Yep.
That's the thought process from what I understand.
Absolutely. And I'm sure there's some regulations on retirement accounts and stuff and what you can do. Most retirement accounts that I'm aware of are based on mutual fund investments, not on ETF investments. But I will say I haven't really kept up with that. But that's my view.
Yeah, I think that, and just also to say too, we're not financial experts. Both of us are just as interest of this is like a hobby.
Guys on the street.
Yeah. This is, do not take our financial advice. But no, most 401ks have a limited option. They kind of have a fund choice for a different individual person in their different point of life. So, like, for instance, the several companies that I've worked for, it's like there's one option for an S&P 500 index.
Yes.
And then there's one option for, a blue chip stock. And then there's one option for, the bond market. You know what I mean? There's just one option for each different category.
Yes.
And when you move those funds from a 401k to like an IRA, that's when you get, more control over the funds.
That's correct, yes.
So people listening too, if you don't know, a 401k is an employee offered retirement plan. Your limits per year that you can contribute is much higher than if you were to individually start your own retirement, which is what an IRA is. An IRA is for an individual retirement account.
Yeah.
So,
Or the public sector version of the 401k, the 403b or 457 accounts. And there's some others for smaller private companies too.
yeah,
I don't
there's
remember
yes, I know I can't think of it right now.
Yeah, there's
like-
one that's it's a type of an IRA, I believe.
Yeah.
That's
Yes, it's
private company.
yeah, I can't remember what I had learned about it once before, but it's very, very uncommon.
Yeah.
But yeah, so when it comes to the stock market too, like it's been going crazy the past like 3 years. There was the dip from COVID just out of fear, and companies just shutting down for a certain period of time. But I more specifically, like, I know that part of the stuff that really excites you, but I like to talk about the economy as a whole right now, because we're coming on the tail end of the highest inflation in like the past 40 years or something.
Yeah, about
since like the
40
70s
years.
I believe.
Yeah.
So how old were you when you first bought your house?
I was 26 years old. Bought the property when I was 24, and within 2 years, or a year and a half later, started building the house, and moved in 6 months later.
How much was the interest rate on mortgages when you did that? Because it was in the teens, right?
Yeah. Oh, yeah. We were in fact, a construction loan at that time was around 15%, and that was down. I mean, in the late 70s and early 80s, when the inflation was so bad, you were seeing mortgage rates at 21% at that time,
Which is insane to even think about.
Yeah,
That's
yeah,
like putting it on a credit card.
This generation, people don't even think in those numbers.
Right.
And so I think we ended up finally with a 15-year mortgage in the 10 to 12% range when it was said and done.
Right, because construction mortgages or construction loans are going to be a higher interest rate because they're not designed to have long term.
Yes. And we were ecstatic to get down to 10%, down in that area.
Yeah.
So, I mean, of course, our whole mortgage was only like $60,000 or something like that.
Yeah. What was the average income back then? Do you know?
My income at that time would have been about $20,000 a year as a school teacher, like a third or fourth year school teacher.
Right. That's not bad though in relation to how much the house cost.
Yeah, no, it wasn't, and
because that was just your income. That doesn't include your wife's at the time.
That's correct. Correct. But it still was a pretty big chunk. I mean, that interest was hitting you pretty hard back then, and so I think my payment back then was $500 or $600 a month. Which at that time was a lot of money.
Right.
So,
well, I look at it more from the perspective of like, there's a lot of people, because I follow a lot of real estate agents and a lot of people that are mortgage brokers, and like I'm very interested in that sector. And there's a lot of people that are saying marry the house, date the rate.
Okay.
Have you heard that phrase before?
I have not, but it makes sense to me.
Right, it does. But that's the advice they're pushing right now. Because interest rates have been going between about 6.5% to 8% for the past 3 months. But people are saying marry the house, date the rate. But the problem is that you can't even marry the house right now because, if you look at the ratio, if let's say between you and your wife, if you guys were making, let's call it conservatively $30,000 back then between the both of you guys, and you built a $60,000 house. Well, I mean, with the land, it was probably 70, 75?
That was with the land and everything.
Oh, 60.
Yes.
Oh, not bad at all. Okay.
Yeah.
So 60,000. I mean, if you're just talking ratios, your income was 50% of the cost of the house. So I think that the marry the house, date the rate thing was amazing for back then because then you could refinance to even if you got 5%, that was insanely awesome.
Yes.
And so you could do that. I think the problem now is the average income is still only about 89 to 90,000. The median income, not the average. The median is about 90,000, but the average home is 450,000.
Yeah.
So those ratios are really off. But then if you look at interest rates wise, we are actually, if you look at the average interest rate, the interest rates are the lowest, or below what the average of the last 50 years was. Because the last 50 years, the average was 7.75. Okay. So we're still below average.
Yep.
And the house prices are just unobtainable. Just to speak for my generation as a millennial, like all of my friends have just given up the idea of owning a home at this point in time because it's like to speak for my wife and I, like, we had talked about, like, we want to be as modest as in what we purchase, house and vehicle wise, because I feel like that's the big difference over your lifetime, because those are the two most expensive things people will ever buy. And we had talked about before we got married, like, when we buy a house, like, we would look at what we would consider a modest home, and even those ones would make us more than house poor if we bought. And I think so many people, like, 10 years ago, you used to have people who, they'd be like single guys making, average income and could buy a modest home and afford it by themselves. And now it's like, unless you have two really good incomes, you can't even afford a modest home. At these, the interest rate is less of a problem. Like, I know for me specifically, I care less about the interest rate, because interest rates are always going to go up, go down. You just keep an eye on them. You refinance when you need to. But the thing you can't ever change is how much you pay for it. You know what I mean? Like, once you have signed that I'm paying X amount of dollars for something, that never changes. You can't refinance the price of the house. You can only refinance the rate.
That's correct.
So, I mean, the way I looked at it, and I hadn't heard a lot of people saying this in the past 2 years, but, like, I would rather have an affordable home at 18% interest rate where the payment is very manageable, and then refinance it if I need to 10 years later when the interest rates come down. The problem is both the interest rate and the price has priced so many people out of the market, because it's right now, from what I understand, it's the only people that are in the market buying houses are people who make above average income. And they're still not buying the houses that they thought they would buy. And they're really, like, there's a lot of people that aren't voluntarily in the market. They're in the market because of, like, necessity, because they maybe they had a rental situation that fell through, and rent is $2,500 a month, and it's like, well, for that I'd rather buy a modest home. And those are the only kind of people, divorces and stuff like that too. So there's not a lot of people selling their homes either. Because, for instance, if you have a mortgage that's at 3%, and you're unless you're downsizing, like doing a severe downsize, you have no incentive to sell your home. Because if you got whatever the balance of your mortgage is, if you move that balance to a different home, it's going to be at a higher interest rate, and now your cost is going up. Because I don't know about you, but I can speak for my wife and I. Everything has gotten way more expensive in the past year.
Yes.
Everything.
Well, and it has. And, this is one reason. Now, we've been in this house for 37 years. And it's, there were times when we could have upgraded. We considered at times whether to go elsewhere. It's not overly large, but it's also not real tiny, depending on whose world you're living in. And it's 3-bedroom, 2-bath. I mean, good size family room, good size master bedroom in it. And we just decided it was more important to be comfortable than it was to live for the house. And which is what becomes the issue is your whole life becomes trying to pay for that house, and that doesn't decrease stress for anybody. Typically when you move up to bigger and better. There was also very much a trend in the early days of our house of not overdoing it, and in trying to keep in a more modest house, and I found that that has really worked well for us. And we've allowed us to do other things like travel and so forth, those experiences that you file away in your brain forever that were probably more important than the house itself,
Right. I mean, in reality, your house really just needs to, I look at a home like it's a tool. It's gonna does it do its job well?
Yes.
And then past that, it's all frill. You know what I mean? It's just like, you don't need all of the bells and whistles, because bells and whistles cost money, especially when it comes to a house. Those add up quick, Yes. And I think so many people are concerned with, how does their house make them look to other people, instead of how do I use this as a tool? You know, I unfortunately, maybe it's fortunate. I haven't decided yet. Ask me in 50 years if it's served me well or not. But I view so many things in life, like especially material possessions, as they're just tools.
Yes.
What do they do for me?
Well, and you know, there's times when I would rather have, I would have liked to have a bigger house, entertain more people and so forth. But how often did that happen, really? And we've kind of found a way around it that's made our house special, and that's by building the big RV carport in the backyard, and that's become a kind of our social gathering spot.
Yeah,
is in that RV carport. So for $5,000, I built a 25-foot by 35-foot.
Overhang.
Partially closed in overhang. That's really worked nice for us.
And you park your Airstream underneath it.
Yeah, my Airstream, my vacation home.
Exactly.
And
yep. And you open it up, and you know we've done Thanksgiving at your house for
several years
in a row now. It's just it's where I think about Thanksgiving now. So and it works good.
And there's another advantage to not having too big a house is you don't want to make your children too comfortable in there, because then they don't want to move out. And you know, so it was big enough for them to grow up in.
And it's big enough to where you don't have to downsize once they're out.
That's right.
Because that's the other thing you have to consider too.
And I know some people downsizing from some very large houses, or that need to downsize, you know, from very large houses, and you know, you end up with a lot of space that's unutilized or underutilized, or you know, still needs maintaining.
And you're paying taxes on it.
And paying taxes on it. Yeah. I mean, our insurance and taxes are as low as anybody I know, you know, where we're at.
Because you've been there for 37 years.
Yep, we've been there for 37 years, and
imagine if someone bought it from you, how big of a change in those things would be for them.
Yes.
You know, just your taxes alone. Because I mean, the value of your property has, I mean, gone insane since you bought it compared to. I mean, if it was a good investment if you choose to look at it as an investment. But you know, it's become a thing, at least because we're out of Tampa. You know, Tampa had some of the worst inflation in the country in the last 2 years, with so many people moving here.
Yes.
And you know, it's just one of those things where, like, a lot of people that were, you know, that I grew up with, my friends and everybody that's been around here, it's like they're making the most money they've ever made, and they feel the poorest they've ever felt.
Yeah, and that's unfortunate. I mean, luckily, I guess in a way, we grew up in our teenage years under a similar situation. We didn't really know any different, because that's all we saw at that time. We saw gas prices go from 35 cents a gallon to over $1 a gallon, and we knew that was expensive, but you know, it wasn't coming out of our pockets, so we didn't feel it so much. But you know, here we are now, going through it again. I mean, and I understand after the 70s, and when you got into the 80s, all of a sudden it was like everybody felt rich during the Reagan years, when he turned the economy around, and people were becoming millionaires overnight, and so forth. People felt like they had more money than they ever had. It just seemed like it was all around you.
Right.
So
yeah, it's definitely interesting how much times have changed, because like in 2008 I was 11, and you know, I didn't know anything was wrong with the economy at that time. I had no idea. You know, and then now I watch documentaries about, you know, what finances were like for adults back then. I'm like, oh my goodness, every household was stressed. You know,
well, except for me, because I was still in the same house, you know, and even though we've refinanced it to pull capital out of it several times, you know, but the interest rates kept getting lower and lower for us, so it only, you know, made best sense to do it that way, and we intentionally did it.
Right.
Yeah, you know, and again, having been by that point, we'd been in that house for over 20 years, so the mortgage wasn't huge by any stretch of the imagination.
Yeah, no, it's definitely interesting how different people handle money. You know, because for instance, like, I am very much against doing loans for as many things as possible. You know, I think unfortunately, loans should be something that's taught about in school, I believe, and it's not. I mean, if you ask most people to explain the difference between simple interest and compound interest, that might be the first time they've ever heard that. They didn't even know there was different kinds of interest.
Yeah.
And they see a percentage and they just go, okay, that the lower the number, the better. They think that in their mind, and in most instances, they're correct. But it's just, I've reframed how I look at loans the more I've learned about them, and I've just gotten more into this idea that, like, for most things, like, credit cards, vehicles, consumer purchases outside of a mortgage, excuse me, those interest rates, mean less. But most people, if you just made an auto loan basically if you took auto loans away and you went back to how it was when you were a kid, which is that if somebody, auto loans, I think, became a thing when you were a kid.
That's a good question. I don't know the answer to that.
We can Google that. But the auto loans, if you made people all of a sudden have to pay in cash or write a check, pay it in full for a vehicle, I bet you the prices of vehicles would drop significantly. People would it would go back to like how your dad was, my grandfather,
yes,
where everyone knew how to work on cars. At least doing basic maintenance, everyone knew how to do that. There was no question.
Yeah.
There wasn't the amount of oil change places like there is nowadays.
Yes.
You know what I mean? Like, everyone changed their own oil.
Yes.
It was not even a question.
Yeah.
You rotated your own tires. You did it. You really just went to go to the shop to buy the tools you needed to do the things. And so many people have just gotten so normalized with, oh, what's my car payment? And I'm like, why even have a car payment? I feel like a lot of middle class people, car payments are what keeps them from ever being wealthy.
Yes. Well, and I never owned a new car, my wife nor I, until I was 31 years old, and I don't know that I ever paid more than about $3,000, maybe $4,000 for a car, and that would, so we're talking until 1990. I never paid more than that for a car, because that does interfere with how much mortgage you can have if you're going to, and
how much you can invest.
Yeah, and how much you're going to. Yeah,
how much freedom you. So I always have mentioned it several times in this podcast. Is just like how many people are strapped to their payments.
Yes.
You know what I mean? They work to afford the car and the house that they have. They don't work to be intentional with their money and lead a life that they love.
Yes.
And that's really unfortunate. But we have a system that sets you up that way, and we'll go into that in just a second. So it looks like car loans were for short periods, generally about 24 months and no longer than 36 months in the 1980s. Wow, now they're financing cars for like 9 years now. Wow. That's crazy. I wonder. I would like to learn more about when it originally happened. Here, let's see if we can find that out. When did car loans? Well, how would you Google that?
Start. It was one of the choices there.
When did car loans get invented? 1919. The car loan was officially invented in 1919 when General Motors established the General Motors Acceptance Corporation.
GMAC.
Hold up. When was the Great Depression? Because that was that same depression.
That was in 1929.
Great Depression, 1929 to 1939. Huh. So I bet you it was something to do with the fact that during the world, because World War I was then, wasn't it?
What year did it say? 1908?
1919.
1909. Well, that would have been about the time of the Spanish flu pandemic.
And 1919 was also when World War I was going on.
Okay.
I wonder,
right at the end of it.
Yeah, right at the end of it too. Probably because there was a lot of veterans coming back, and they needed a way to finance them. I would find that interesting to learn the history of it, because so that means it's been 100 years.
Yeah.
Of the auto loan?
Yeah. Well, and now you look at like the one that floors me is a loan for a boat or an RV. And most people are taking out loans that are 15 years or longer for an RV. And it's because of prices. There's no way average person can afford that with the other things in life. Yeah. And they figure they're going to keep it for a long time. Even, but the point being is in many cases, those RVs don't even last that long.
Right.
And so
and they drop like rocks in value. Most of them, not
Yes.
Airstreams, but most of them.
yeah. Well, right now even new Airstreams are dropping like rocks.
Yeah.
And
Yeah.
so but yeah, most of them particularly, and most people, I think they look at it as, all right, I'm gonna pay for it as long as I'm enjoying it, and then when I'm tired of enjoying it, I'm just going to turn it back in again and take whatever hit.
It's a big one. It's the same thing with cars, though.
Yeah.
The amount of people that will go upside down on their vehicles or their RVs, I mean, it's insane.
Yeah.
Thousands of dollars.
Yeah.
Not including how much money they're paying in interest to do it.
Yeah.
I think if you showed people like just how much money they could potentially lose in every vehicle, like I feel like we're coming upon a time. I really do think we're about to hit a recession. Historically speaking, when they lower interest rates, that's normally when the recession starts. So they haven't lowered the interest rates as of today. We're in February 11th of 2024. I really think that we're going to run into an issue where so many people have financed so many things that I think that it's gonna come back and bite them in the ass, because I think that you could finance clothes now. You can finance your Amazon purchases. It's crazy.
And a credit card, you're doing that anyhow. But yeah.
Wow. Everything you can finance so many things, and honestly, it's old school. And like, I listen to a lot of Dave Ramsey, and one of the things he talks about, he's like, I'm just giving you God and grandma's advice. And like, if you really think about it, like grandparents, I mean, you tell them about a credit card and they roll their eyes at you, they pay for stuff in cash. If they don't have the money for it, they don't buy it. That's it.
Yeah.
They stick to a budget, they have what they have, and that's it.
Well, and unfortunately, they're very good at the banks, the credit card companies are very good at sucking people into it. And if you haven't paid attention, I mean, the interest rate on credit cards is now 20 to 30% in most cases. So it's not friendly at all.
And what's weird about those is most people don't realize that credit cards are what's considered a revolving loan. Yep. So that means there's no set date that it's going to get paid off.
That's correct. And if you make the minimum payment on it, you're going to stretch it out. I think it's what they consider 20 to 30 years or something like that.
Yeah, it's a mortgage. Yeah. Basically. Like most people don't realize on most credit card statements, whenever you get it, it'll tell you if you make the minimum payment, how long it'll be before you pay it off.
Well, if you look at how
Because they're not designed to be that way, but they take advantage of people, because if you never learn this stuff, if you didn't have a parent to teach you these things, or if your parent doesn't know, that's what they're going off of.
Yes. And to the banks, this is a great way of income.
Fantastic one.
And so, all they want to do is make as much money as possible, making you happy in whatever way that is. And I haven't seen where a whole lot of people have gotten mad at banks for doing this to them, but it's what people have done now for a number of years.
Maybe I should
generation.
Maybe I should do a segment of the podcast where I just break down individual different types of loans and explain it to them. Because
there you go.
Most people don't, like I said, compound interest versus simple interest.
Yes.
They don't understand the difference between the two. And they don't know how the loans they're getting work. All they know is what their monthly payment is.
Yes.
That's it.
Yeah.
And they don't understand how. If they get a low interest rate, they brag about it to their buddies at a bonfire. That's about it. Yeah. And everyone's sitting there, he's got a 2 and I've got a 2.5 or whatever.
Yes.
On my vehicle. They don't. There's so many levels to it too. And remember when I don't know if I told you this or not, but I had thought I should be some kind of salesman of some type. I just had to figure out what it is I wanted to sell. And I remember, like, if I mentioned that to somebody, they'd be like, go be a car salesman. I'm like, I could never be a car salesman. I couldn't do it. I'm like, I just cannot drive myself to do it, because yes, you can make a lot of money as a car salesman, but in my opinion, you're taking advantage of people.
Yeah. Well, and I'm not sure car salesman now is what it was a few years ago either.
Right. Yeah. But, especially right now, nobody's buying cars right now.
And it's kind of funny. A lot of organizations, as they see their salesmen making big money, they start finding ways to change the percentage that the salesmen get to keep, so that they never really get more and more successful. They actually have to work harder to make the same kind of money.
It's crazy.
And so, well, it depends. You got to look at each business and how it's being run.
It's crazy. I mean, it's an interesting world economically. I feel like so many people cannot. I've always said during the last election, I remember I went to your mom's house, to Grammy's house, and I went for a run. And I remember running, and I was like, because I remember being on social media and how everyone was so, everything was just politics. And I was like, there's too many people worried about what happens in the White House, not enough people worried about what happens at their own house.
Yes.
And I feel like that's, it's so easy to judge other people that you feel like they have more power in your own life than you do. And, I really do believe that, most people, if they actually took the time to figure these things out, granted, you and I are both nerds about this stuff. So you and I know I will analyze something 9 ways to Sunday before I make a decision that most people, it's to a fault too.
Yes.
To a fault. Because sometimes I won't make a decision because I'm too busy analyzing it. I wish I could.
Analysis paralysis, it's called.
Yep. Paralysis by analysis. I've definitely heard it before. I was like, that's 100% me.
Yes.
But, I've learned to cope with it.
Yes.
I've learned to cope with it.
Well, when you make decisions that are going to impact you for years potentially, last thing you want to do is get buyer's remorse too, which is you didn't really think about the situation, analyze the situation, and you made an emotional decision, and that emotional decision is going to cost you for years now, such as paying a huge price for a car. I've seen it in the RV market where people go out and buy a new truck, buy a new RV, and they find out, well, they're not happy with either one of them in the situation, so they go and trade them both in, take a huge hit to buy.
We're talking 50% decrease in price.
Yeah.
And if you're lucky.
Yeah. And then they buy a bigger truck and a bigger trailer, and
they roll the negative equity into it.
Yep, roll the negative equity into it, and they hurt even more at that point. So
it's wild.
It is. And so taking the time to think things out, I think, is beneficial. And sleeping on those decisions.
I give everything 24 hours. Not even just sleeping on it. At least give it 24 hours, especially something like that. I'm to a fault analytical. Like I said, like it'll be months that I'll have been thinking about purchasing something that's $100, and I'll say, you know what I mean? It's just the paralysis by analysis. But I have learned to cope with it. I actually read a book recently called The 4-Hour Workweek for the podcast. We read it for the podcast. I'm doing a book club with some other buddies now for the podcast, and in that book he had talked about, he's like, for the people like me and you, where you get the paralysis by analysis, he says, find whatever it is you're wanting to buy. Find 3 different options, not 4, not 5, just 3 different options. Pick one. Pick one of the 3 options. Research those 3 options as much as you want, but most of the time it's so easy to get overstimulated by all of the options. Yes. He goes, come up with 3 options and then pick one. He's like, he said that what is it? The enemy of good is the best, or something like that. Something to the effect of like, would you rather make a decision that's 90% what you want than never make a decision because you couldn't find something that's 100%?
Yes.
So,
you'll never find anything 100%. I understand that philosophy too.
Yeah.
And so,
but as far as the economy goes, I think it's going to be a tough year for a lot of people, unfortunately.
It's going to be interesting. When in fourth quarter 2023, the market was moving up nicely.
You're referring to the stock market.
The stock market, yes, excuse me. And there's been talk on and off for the last year and a half about a possible recession, which didn't really materialize in 2023. Still some talk about it into 2024. But I went ahead at the end of 2023, around the 20th of December, when things were still moving up nicely. I went ahead and sold off some of my ETFs and decided to just go in cash. Money market's paying about 5.25% right now,
which is what most CDs will do. So interest rate wise, you're not doing the best that you could do, but you're doing really good considering the liquidity, meaning cash.
Yeah, and understand, with my investments, I need about 5 or 6% return to keep from getting into the capital of my investments and just keep me going. So that kept me on the low end of things if the market would handle the other end of it. So I've got about approximately 20% of my assets in cash right now, and just sitting there. And if I see the time to reinvest, I'm guessing as a presidential election year that the market will probably go up at some point. I'm guessing after June. And I may jump back in a little bit more in the market at that point, but I'm kind of watching, and that's one of the advantages I have of managing my own money is I can be very spontaneous as I need to, and jump in and jump out of things. And I haven't historically done that. I sat on one mutual fund that didn't do anything for 20 years, and I just sat on it. It was negative equity the whole time, and finally ended up selling it 20 years later at about the price that I bought it for.
Oh, no.
And so I made no money on it over 20 years. And this was based on somebody's recommendation, a professional that was kind of new in the market.
Oh, yeah.
And I'm sure she made her money off of it, somehow or another. But
Convincing other people to buy it.
yeah, exactly. But I've been watching my individual ETFs. I have some market ones. I have some sector ones. In information technology, I've got an information technology one that's got a long history. The Vanguard Information Technology has done really well over the years.
The last 30 years has just gone bananas for those things.
Yeah.
The IT world, the technology world, since the internet has just, the IT world 50 years ago was not anything to be excited about, but it's blown up. And I think a lot of, like what they talked about on that Vanguard video you sent me, was the AI, and how all these AI companies now are coming to the surface, and now there's this race to the top of artificial intelligence.
Yes.
And I think it's going to be huge. I think it's going to affect the labor market too. Here's what I think, and because we've talked about your Vanguard video that we watched, but I sent you some videos too from there's two YouTubers that I really like, Graham Stephan and RJ Talks. I don't know who RJ Talks is, but it's just he owns this real estate software that but he makes a lot of financial videos, and I love his content because they both of them, they analyze and review stuff and say why they believe what they believe. But I really think that real estate is going to take a hit this year, and the reasons I believe that too are the interest rates have risen the fastest they've ever risen before. They have never moved the interest rates this quickly, and I think that is also going to mean the economy is going to crash the fastest it's ever crashed, which is, I think, not an intended effect, because their intended effect is to have this quote unquote soft landing. But from the videos I've watched explaining historically what happens when they lower interest rate, that's typically when the economy begins to collapse. But inflation, so what the Federal Reserve tries to do is they're trying to control inflation.
Yes.
Inflation they want it to be around 2% per year.
Yes.
And it was 9-10% the last couple of years. So they're getting close to that number. But the problem is that when inflation hits its peak, it typically isn't felt by the average consumer for about a year. There's a delay factor there. And I think that they're not anticipating that delay as much because, the interest rates peaked in November. So we're not going to feel the effect of that peak. In my opinion, the average is about 11 to 12 months before the consumer feels it. And so to me, if the average is about 11 months, so let's go, it's October, November of this year, it's going to be tough.
Yeah.
I think it's going to be really, really tough because that's when they had interest rates peaking. And they're still high now. I think that going into 2025, I think, if we're just looking at statistics, during the pandemic, you had record low bankruptcies and foreclosures. Like it was just like super, super low. And that's going to average out. Everything is an average over time. And I think that there is going to be a giant spike in those things. And the reason I believe that, so I think that, the Federal Reserve just met a week or two ago, and they decided to hold the rate, which everyone anticipated they were going to hold the rate.
Yes.
Because as all this new information is coming out on what inflation was not at the number that they wanted it to be at. So I think that that March is the next time they meet to discuss. I would, there's kind of like hit or miss on whether they're going to keep it there or not. I think they're going to hold it there, and I think it probably won't be until about May when they start to cut the rates. And I think when they do, they're going to learn why they shouldn't have done the interest rate increase as fast as they did, because it's not going to be a soft landing. I think it's going to be a crash landing.
Oh, and you know, I admit that's not my specialty so much. I do agree with you that somewhere in second quarter is probably when they're going to start cutting the rates back. You know, I don't think it'll go back to the, you know, basically 0% that it was.
No, not for a long time.
No, not for a long time. But even if they drop it 2%, that's a huge. I mean, that's enough. 2% is enough to typically refinance a house on. Is that a 2% drop in the interest rate? You know, and with the presidential election, and right now things are so fragile with that and everything that's going on with the current president and the past president, you know, that who knows what's going to happen.
Right.
But presidential election years historically are financially not bad years. I think everybody, or the people that are in office, want to make it look as good as possible, so they will make moves. But our deficit in the country is so high right now that you think at some point that's got to impact us. And so,
can I tell you some other things that I've learned from watching those videos? I don't know if one of the videos I sent you showed this too. Is the amount of so we're now having this mass retirement of the baby boomers right now.
Yes.
Because the baby boomer generation, which is your generation,
yes,
is now moving into retirement, and they hold the largest amount of wealth per the age group.
Yes.
But a lot of people in your age group that did not handle their finances well during that time are living strictly off of Social Security. Social Security does not pay enough money in most cases for people to live during high inflationary periods like right now. Most people live paycheck to paycheck. Was it 50-60% of people, you know, if they missed a paycheck, it would be detrimental to their finances.
Yes.
And that was before inflation.
Yes.
When you add that inflation in there, there's 50 to 60% of the population that cannot absorb that financial hit.
Yes.
And because they have car payments, they have student loans. Student loans just started back up in October too.
Yep.
So that's something that we haven't even mentioned, but that's a factor.
Yes.
And then, you know, all of these additional things. So you have a portion of people that are retiring that are well off because they've always handled their stuff right. And then, you know, they've had that buffer in their budget to where if their car insurance goes up and their phone bill goes up and food and you know, they can absorb that extra hit. But there's so many people that cannot absorb that hit.
Yes.
And I think, you know, they're going to be a large part of that, of what's going to cause the economy. Like, either prices are going to have to come down or people are going to have to get paid more. And people who are on Social Security aren't going to get paid more.
No. And that's the unfortunate. I mean, we did have a really good increase in Social Security for 2023. I mean, we went up, almost 9%, 8.7%.
Is that what they give the raise in Social Security for?
Yes.
I didn't know. I thought they just did it 3% every year regardless.
No. Our pensions historically, like my school district pension, historically had been 3%, but Social Security follows inflation, so it does go up. I went up 8.7% last year, and I think it was 3.4% this year.
Well, the problem with that though is that if you pay somebody 8% more and it just tracks inflation, what it doesn't track is how everything didn't just get 8% more expensive. Everything got 25 to 50% more expensive.
Well, they're saying the overall was 8.7%, which is where they came up with this. And here's the problem with the Social Security thing is, first of all, most people, I think it's 60% of the country gets into Social Security. They start the Social Security at age 62, the minimum age, which means you're taking a reduced amount. And in most people's cases, that amount of Social Security only covers about a quarter of their income. And if you don't have other sources of income at that point, or minimal amounts of income, then boy, you lift yourself a big gap. And even if your house is paid off, trying to stay up with that is very challenging. If investments aren't doing well, I mean, I retired at a time and investments started dropping, and even though it's not my main income, I was still taking some income from it, and so I was pulling out principal in essence, and not pulling out interest that I made off of the money, and so I reduced my investments a little bit, over the years. So now I'm trying to let that, now that the market has gone up over the last 8-9 months, pretty nice, then I've been trying to let that build back up again, and it's slow process in getting there, and who knows, with the dips and peaks along the way, what that'll really look like.
Yeah.
And so I keep pretty good track. I particularly track it like on a quarterly basis. Even though I'm watching it daily, I know where I am, but my spreadsheet is just to look kind of the big picture. Where am I every quarter?
Right.
And
I think you're making a great decision with the cash too, because I mean, if you read about Warren Buffett and his company Berkshire Hathaway,
I know who they are. I haven't been reading about
they are
them.
sitting on the biggest cash reserve they've ever had.
Really? Okay.
By percentage and dollar amount, the biggest they've ever had.
Yeah.
They're waiting for this ticking time bomb to break.
Yeah.
I've told you before, I watched that documentary. I want to say it's called Hank. I can't remember, but it's about Hank Paulson. I think that's his name. Hank Paulson was the Secretary of the Treasury during 2009.
Okay.
During the big financial collapse. He basically said that, there was a time where like they had like less than 24 hours to figure something out, or something was really bad was going to happen. So but he said that he didn't make this documentary to like gloat about how good of a job he did. He said, I made this documentary because nothing's like gonna change until people are telling everybody it has to change. And he goes, this is gonna happen again.
Yeah.
And I think it's a fantastic documentary. If you can find it and watch it, it is. I mean, I've watched it like 3 times. I enjoy it that much because he talks about the breakdown of. It's like a timeline of what happened from his point of view. Which I mean, what better point of view than to be the Secretary of the Treasury when the economy's falling apart?
Yes.
And I don't know. I love that stuff. Watching about what happened in 2009. He goes, "This is. I'm making this as a warning to what's going to happen again in the future."
Well, and in the country is heading more and more away from pensions and more towards personal investments. And I know people during that 2008, 2009 collapse that lost 40 or 50% of their investments. And I say that, they depreciated that much. And people that were planning on retiring at that time or that did retire really took a massive hit.
Well, the issue wasn't that that their value of the stuff went down. The issue was the value went down and they sold it.
Yes.
They sold it for a loss.
Yes.
That was the issue.
Yeah. And that's what it's really hard to write out the emotional side of these things because you don't know how much they're going to go down during time periods like that. And I've done some interesting things. I'm getting much better at this bit of writing out the highs and the lows, and I say, or taking advantage of them. Sell high, buy low, and again, another reason to sit on a bunch of cash right now and wait till, I feel like it's a time to start going in.
Something severely undervalued. That's really what you're looking for.
Yes.
Is something that's severely undervalued.
Yes, yeah. yes. And so, I do my share of reading to try to make my investments.
Where do you get your information from?
I read the Fox Business. I read actually through AOL, where I use an AOL app. They actually have a variety of articles or different news organizations, but and also another one too. I use the Apple Stocks tracker on my iPhone, and it has a lot of articles in there too. That will tell you what's going on at any given day or period of time on tracking that. And so I am always looking for what I think are young, up and rising, technology. Even though I've also dumped some money into industrial stocks too. And trying to balance that portfolio in that manner. I have pulled out all my money out of real estate that I had in the real estate sector ETF. And
Because you think it hit its high.
it wasn't doing well in its history, because it includes not only residential but commercial real
Commercial's
estate.
taking a hit.
Yeah, is not great, anyhow. And so, but yeah, like consumer discretionary, I have some money in to, try to hit a variety of different areas. Though I will say, I have a lot of money into the big boys, the big seven as they call them. Whether it's the mega cap ETF, whether it's information technology ETF,
Right.
whether it's S&P ETF,
I heard a discussion. I don't remember. Couldn't tell you where. Well, first things first. I wanted to tell you Investopedia. If you ever heard of it, it's a website.
Yes.
Investopedia. I love their stuff. I read their articles pretty much daily.
Yep.
I love that they've always got new stuff coming out. But so where was this point I was getting ready to make? Commercial real estate.
Investors Business Daily is another one that I know somebody that has followed, or a couple of people that have followed that one through the years too.
I can't remember what I was going to mention. We were talking about commercial real estate.
Yeah,
I was going to extrapolate a little bit on what I think is going to happen. I think that when they do start to lower interest rates, I think that that would be, you're going to see an influx of people go to put their home up, because right now I think the average mortgage interest rate's about 4% for people who bought before 2020, and I think those people are going to sit on those mortgages until interest rates get closer. It doesn't have to be exactly that number, but there's going to be a lot of pressure for people to want to sell. I think there already is too, but they want to sell, but they just can't. That makes the least financial sense for most people because of interest rates. But it's going to be interesting to see what happens when they do start to lower interest rates. I think that the election, the good part about the election, or what people are saying is election years are typically good. I don't think that's going to be the case this year. No. I think it's going to be a tough, because I think it's just coinciding with really bad inflation at the wrong time.
Yeah.
I think that's going to be what really happens. Now, as far as the business side that you were mentioning, the big seven businesses, this is what I was going to tell you earlier. So you mentioned pensions and 401ks. So the difference for people that don't know is a pension was a retirement account that was given to you. It was not operated like Keith did not operate his pension.
I had no control over it.
Nothing to control it.
Other than make more money.
Which is right, exactly. Make more income from your salary. So the bad part about pensions is you have no control over it. That whatever investment they put it in is what they put it in.
Yes.
That you have no control. Now the good part is that everyone who worked for a company that had a pension, you didn't get, you correct me if I'm wrong, but you couldn't opt into a pension. You either got it or you didn't.
That's correct.
You got it or you didn't work.
You were in it, period.
Right.
There was no option.
Everyone had an option for it. So 401ks benefit the individual who uses them.
Yes.
The problem here, sorry, that's rubbing.
Okay.
Let me move your microphone a little bit. But so pensions benefit people who use them, or 401ks benefit people who use them.
Yes.
The problem is that most people will not use a 401k because it's the voluntary act of doing it.
Yes.
So that means that it is cheaper for companies to give people 401ks as well, because they offer a match. That's their idea of offering the pension, right? So the match is, here's the money that we're contributing if you contribute.
Yes.
But that's the thing, is most people won't contribute. So these companies, like someone was talking about how the companies that aren't like helping people to get 401ks or retirement accounts that contribute the least amount to retirement accounts for the amount of employees that they have, like the ratio is really off. Like think about people that work at Walmart long term. most of them cannot afford to put into a retirement account.
Yeah.
But Walmart goes, oh yeah, we've offered a 401k with a match program. And it's like, yeah, but most of your people aren't contributing to it, and most of the people that are working there are going to have to get government assistance. Like by operating your business the way you have, and it's not saying that they can't do it. It's completely legal that they're doing it, but they are making a bunch of employees who are going to be reliant upon the government. So it's like, because of Walmart not taking care of their employees, there's no punishment.
Well, here's the other thing too: is they can offer a little more salary to these people, which attracts them to the company, attracts a better employee to the company with less commitment, in essence. There and employees have become very salary sensitive, and that is their number one focus. And most of them don't look at the other piece of the benefits package that's included, whether that's health insurance, whether it's long-term health insurance and the options. That's the thing killing most of my generation that can't retire is because of health insurance, cost of health insurance.
Yeah, and I think to get political for a second, the problem with the government. So when I was in college, I had a business professor at the just community college, and one of the things he asked us, what's the job of the federal government? He's like, everybody that here is working, what your job is. If it's to bag groceries, it's bag groceries. If it's to make pizzas, it's make pizzas. You know what your job is. What's the job of the federal government? And it's like, oh shit, I've never had to answer that question before. And I think that's half the problem is that most of the people that are in the federal government don't know what their job is.
Yeah.
And he was saying, he's like, in reality, the federal government should be taking care of like operating the military.
Yes.
And making sure monopolies can't exist. And I feel like they have done a terrible job of making sure monopolies can't exist. Because, I mean, in reality, so many people think that the president is the one who runs this country, and I really don't believe that it is. I think it's the people who own the majority of the businesses here. So it's State Street, those giant Vanguard. They really own the giant companies, and the giant companies. I mean, they pay. Have you ever looked at how much some of the big companies pay for lobbyists?
Oh, it's tremendous.
It's insane. I mean, you can be a very lucrative person if you become a lobbyist for a big corporation.
Yes.
And I think that is one, and I like capitalism, but that is a huge negative side of capitalism. Like, you know who Charlie Munger is?
No.
Charlie Munger was Warren Buffett's business partner. He passed away recently. But one of the famous quotes he said is that, show me the incentive and I'll tell you where the money goes, kind of thing like that. So something along those lines.
Yes.
But in reality, people respond to incentives. And the current government structure, federal government structure we have for businesses, it makes these companies become monopolies. It's insane. And it's crazy because they determine what happens in the movement of this country.
Yes.
And I think that's a huge problem. And as somebody who likes freedom and am very much a pro, like, leave me the hell alone person, I think that there should be more regulation when it comes to big business. I think that if they made it to where it was a tax, where if Walmart wasn't having a percentage of their profits going to retirement accounts, then they should have to pay that out in taxes, because then I bet you they'll fix it. I bet you that all of a sudden the people who pay them or get the most government assistance all of a sudden aren't going to need it as much because they'll have more money.
Yeah.
And it's just, you just have to get creative.
And these ultra rich people, I mean, they're getting, as they get up in age, that their world of philanthropy has become massive. I mean, Bill Gates, that's all he worries about is trying to figure out how to improve the world by using the money that he's made all these years to control what's happening. I mean, here in Hillsborough County schools alone, the Bill and Melinda Gates Foundation funded a $100 million grant, the largest grant ever given to a school district, to try to improve education. He felt that was important. And there was a total, I think, of 4 or 5 school districts throughout the country. We got the largest one. We were the largest school district to get one. And so he's trying to improve. Now, the funny part is, before it was over with, he ended up pulling the grant the last year or two.
Really?
Yeah, because, well, we it became a different time. We had a new superintendent. There were issues financially as well as in the business of schools, and they needed to address that and focus less on the aspect of that grant.
Right.
So
it's very interesting.
Yeah,
it's very interesting because I mean, have you looked at I saw a statistic where it was talking about the average CEO pay versus the average employee's pay. So the average employee's pay in the last 50 years, I think, has gone up by 20x. The average CEO's pay has gone up by 3,000x. So in relation to how much the CEO makes in relation to their average employee, those numbers are very skewed compared to where they were years ago. So your incentive now is to be a business owner.
Yes.
Not to be an employee.
Yeah.
And, you know, for people who want to start businesses, that's a great idea. But I would say 99% of people aren't going to start businesses.
Yeah. You know, and that's been the push for a number of years. I remember back, and I want to say it was, I can't remember, late 80s, early 90s, when the NAFTA agreement was formed, which opened up borders to like countries of Mexico and put us in a much more equal trade agreement. I said at that time Americans would go into Mexico and start running businesses down there, and you know, that we would profit that way. And you know, but you're correct. I mean, there's definitely only a percentage of people. Of course, we have a lot of people in this country that have started businesses and failed, and either lose the enthusiasm for it, or you know, can't. I think the average rich person has probably been involved in numerous failed businesses before they got there. And before they got to being rich, and yet most people don't have the fortitude, stamina to withstand that for a long, or the finances to withstand that for a long period of time. And so it takes a different breed of person. Many cases, people that had nothing growing up, who are just dog determined they're never going to be poor again, and they're willing to sacrifice everything to get out of that world. Yeah. And I do know some of those people, you know.
Yeah, it's definitely interesting, but I think there's, you know, when you were growing up in the 70s, 80s, 90s, that you know, it was normal to have a regular job and be able to easily, not easily, I mean, you have to, you know, you have to be modest.
Yes.
But you could live a normal life, and now I feel like normal is no longer modest, and normal has become, you know, how rich can you look on the outside? And I think that there's about to be a great reset financially for a lot of people in this country.
Yeah.
Too many people. What's Warren Buffett's quote? It's when the tide goes out, you'll see who's skinny dipping. And I think you're about to find out that 50 to 60% of average Americans, I think, were skinny dipping, and inflation's pulling the tide out. You know. So I'm interested to see what's going to happen. Hopefully, you know, we'll both come out in a year and we can go, you know, unfortunately, you know, you benefit off that kind of thing, you know, if you can, and hopefully don't succumb to it. So I think that's going to be the second half of this year when we're going to see that.
Well, that'll be real interesting. You know, I always have a lot of confidence in this country and in capitalism in general, that, you know, we've created the strongest country in the world in many ways, and you know, we seem to always pull out of it, even with our little ups and downs. If you know, do I worry about the amount of deficit spending that we, you know, our deficit for this country? Yeah, I do, and it's, you know, and it's gotten so much worse in just the last 10 years, and that's not going to help things in many ways.
So to go back to the Social Security thing, one of the things I thought about earlier when we were talking about that is how Social Security is essentially a Ponzi scheme. It's a government-ran Ponzi scheme.
Okay.
It is paid out for, like, the money that they're paying you is paid for from the people who are still paying into it.
Yes.
And it's going to be a little bit lopsided. That's another thing, too, is you have the so many baby boomers going into retirement taking Social Security.
Yes.
There's not enough people paying into it to pay out. So it's going to keep going. That's going to drive the debt as well. And I think that's something that has to be solved. Can I explain? I don't know if I've told you this before. I have come up with what I believe is a solution for that. Let me find the So I had a So what if you contribute 10% or more of your income into a qualified retirement account? Qualified maybe meaning a diversified, by whatever metric the government decides to do. If they made it to where anybody who paid into Social Security, that like for instance, right now I pay into Social Security and have a retirement fund, but Social Security is supposed to be for my retirement. But I mean, historically speaking, as well as I do that if you had invested that in an index fund, an S&P 500 index for that same amount of time, you would have been way better off. You know what I mean? So I think that they should make it to where if I'm contributing to a retirement account for myself, that I don't have to pay into Social Security. I would much rather do that. I think that the minimum amount that you should have to put into retirement should be the minimum amount they give you in Social Security. Yeah. But am I wrong? Was that not a good idea?
Yeah, no, and that makes a lot of sense in many ways. But if you go back to the whole point that people aren't very good managers of their money, and so unless they're forced to do it. And so what you're doing is you're paying the government to manage your money for you.
With the Social Security.
Right. and what you're putting into it. And it's pretty substantial what you're putting into it. I mean,
that's what I'm saying. Like if I had the option to opt out of Social Security.
Yes.
My way of opting out of it was I had to take that same amount of money and invest it myself. Like I would do that in a heartbeat because they're going to manage. Capitalism will manage the money much better than my government will.
Yes.
And I truly believe that. And I wish that they would offer something like that. I also had put something in there too that, to incentivize the government to hold inflation. I put that for every 1% that inflation is above the 2% minimum, I feel like they should decrease everybody's taxable income for the year by 10%.
No, there you go.
Drop them down to 10. I mean, because most people's tax bracket is going to be in the 12 to 22% range, and the government would take a huge financial hit by doing that.
Yes.
So, I mean, I'm not going to be the one to tell the Congress that they should maybe look at doing that, but I mean, how much better would that government be at serving its people if the government themselves took a financial hit from the people taking a financial hit?
Remember, there's a huge push right now, though, from the liberal side of the population for the government to do more for them, not to do less for them, and so people want less and less responsibility and more support.
It kills me because I tested in high school in my economics class. I tested that this is in 2011, 12. I had they took you take a questionnaire, 10, 20 questions, whatever, and it tells you which political party you most align with. I had at that time mostly aligned as a Democrat, which is so funny because so many people think I'm Republican, and I would probably say I'm neither of them because I hate them both so very much, and I'm very much a center person. But like I think about that Social Security problem, it's like my least favorite thing is get government involved. Because to me, I think about government is like when you play a game of Monopoly, the government's the person with the rule book. Nobody remembers all of the rules of Monopoly. So you keep having to ask that person, and you take what they say as their word as bond. If they decide to lie a little bit, they're going to do it to advantage themselves. I think that they need to set a level playing field for business to happen on, and I don't think that they are. I think they're incentivizing big business right now. Big business doesn't. The only time big business wants the same thing that people want is whenever it hurts big business. So, I'm a capitalist person. I like capitalism. I just think that, without going too far into socialism, there needs to be this balance, and I feel like the balance is off.
And unfortunately, money drives people, good, bad, and indifferent, and drives the whole direction that we head into, whether you have a corrupt government stealing money, or the people working under them, that are in essence, stealing the people's money. One way or the other, there are people that are willing to do whatever it takes to make the money, to get the money. And yet you've got your general population who, hey, I want to live a nice life. I want to have a home, a 3-bedroom, 2-bath home,
two-car garage,
right,
paved driveway,
exactly,
an acre of land,
and many of us are content with that. And probably if everybody kind of had that, their whole life, it would probably be a more level playing field for everybody. But for those that have sacrificed or have seen the other side, they know nothing but big money, big finances, big house, power, and so forth. That's its own adrenaline junkie itself. And they want to continue after that person that wants their own private jet. So you've got a lot of different things happening out there, and we definitely have gone through a phase where the unions over the last 15, 20 years now, unions were pushed out of the market, taking the power away because, people making $80,000 a year working on an assembly line was a little bit ridiculous. And then the focus became get a college education, everything was about get a college education.
And that's become inflated.
Yeah, and now that's, getting turned around. I mean, people were getting degrees that really didn't mean a whole lot. Sports management, come on.
I swear when I have kids, I want them to be plumbers. That's the best job.
And who knows what that'll look like when your kids grow up, And what I found is find the river. Find where the river's flowing and follow it. When I came out of college, or even when I was in college, I decided to become a math teacher. Math was my strength. Teaching, there were a lot of jobs out there, so you get in that part of the river, and I did that until I saw, computers was a growing thing. Personal computers. Got involved in that and followed the stream down in that part of it.
You followed stuff that was high demand.
High demand, exactly, where there were going to be a lot of jobs. In late 90s, when I was thinking about going into administration or leadership in some form or fashion, there was a huge demand for school leaders, and I still remember going and sitting in the auditorium with 300 of my best friends in the school district, listening to the district try to convince us why we wanted to become school principals, and I started heading down that road, and it took me 4 or 5 years to get my first leadership position, and then another 7 years before I became a school principal. But it was the ride I took, and it was, again, where the water was flowing. And it made it a lot easier to go down that road. So who knows what it's going to look like for your kids. Yeah. And you've got to be open-minded.
I know. I'm just saying, like, historically speaking, plumbers make more than doctors over their lifetimes, especially if they own their own business. When you compare the cost of the education with how much money they make a year, plumbers can make a lot of money.
Yeah. Well, but that hasn't always been true, unfortunately, and it is now. Yeah. But there were times when the plumbers weren't making money, and that became kind of the issue. Yeah. Or they would make it when the housing market was strong. People in construction. I was one I kind of stuck in my mind. Do I become a building contractor or something like that? Electrician, whatever. And when the market's strong, they make good money. But then there's those downsides when the market starts falling, that it's hard to make a buck even. And so that's been my aim. Just keep your eye on what's happening out there.
Make yourself valuable.
Yeah, get your head out of the sand. Yep, make yourself valuable. See where the market
that's a huge thing I would say is an issue with my generation, is they don't want to make themselves valuable. Yeah. They see themselves as, like, the government needs to take care of me. The company needs to take care of me. And I'm like, but you're not valuable. Why would you? There's been this, like, huge culture shift of, like, just hiring warm bodies with a heartbeat. You know what I mean? That's really all and they think that makes them special because they're alive. And it's like, no, you need to make yourself special.
Yeah. One of the real a catalyst for me to go into education. We knew that teachers didn't make a lot of money per se, but as both my parents were in education, they always had a fairly nice house. As they got towards retirement, they were able to afford cars and so forth. And then I looked around at other teachers and saw how they were living, and they were all living with the pension and so forth that they were getting from it. They were all living a good life, especially as they got towards retirement, and there was something to be said for that they weren't struggling through the years. Now, unfortunately, the teacher pension isn't what it was.
Right.
And these days, if you're not managing managing some investments as well, you don't have some decent investments, you're not going to be living that great life. Right. I don't think so.
Yeah, I think that there's a lot of people too. At least with me, I've really changed my whole outlook of retirement too. Because there's the traditional retirement thing of when you get to about 62 to 65 to once you start collecting Social Security, start to retire. I've gotten to the point that my philosophy for retirement is I want to never have to retire, I never want to retire, but I want to have the capacity to retire as soon as I can. That's really all I want.
Yeah,
because that's financial freedom. Retirement is just having financial autonomy to choose what you do with your time.
Yes, but
I think that a lot of people, if they don't have a job when they retire, they go crazy.
Yeah, and it's just like what my life looks like now compared to what it looked like 2.5 years ago. I got rid of that day-to-day stress, which will kill you if you're not careful. I've replaced it with a chunk of my day in exercise and socializing at the gym and so forth, and then working at the college part-time. I look at managing my investments as one of my jobs. I have time to sit there and pay closer attention. When you were working, you really couldn't watch things on a day-to-day basis. That wasn't a priority. Doing more projects myself, I'm getting pretty good. I mean, even on our groceries and so forth, and managing how much money I spend on eating.
It's so easy. That's the easiest category to overspend on.
Yes, and so I was doing some of those mail order dinners for a while, and I learned a lot about cooking through those. Collected a bunch of recipes, and now I've gotten where, all right, I can do some of these, and I'm actually at a point where I'm saving some serious money versus ordering them. They were nice for a while, but now I'm learning to find more recipes online. Determine the other day I had some sockeye salmon, and I'd never cooked sockeyed salmon before, which
it's easy.
Well, and I've cooked regular salmon before, the farm-raised salmon, but it's a little different.
It's very different, yeah.
And so, I found a recipe was nice, and I tried it, and it even suggested, cooking asparagus with it and so forth, and by George, it came out to be an okay meal after all.
You're pursuing different things, and I think that's the thing with retirement is you have to be pursuing. I think too many people go into retirement and it kills them because they just stop doing stuff. They get dementia, they get Alzheimer's, their brain falls apart, and
gray matter. Got to keep that gray matter working.
Right? Yeah. If you just view your brain as a muscle and you have to work it out, then I think you'll be fine. You have to be working on something. My thought was like, what would I do if I retired and I had financial autonomy at age 65? I'm like, well, I'd probably start my own business. I'm like, why would I not do that now? Why would I not pursue the podcast now? Why do I gotta wait till I'm retiring? What if I don't make it to retirement? So that's a lot of, you've probably seen a lot of people that never got to see the light of day for retirement. So I'm like, I'm not gonna wait, I'm gonna do it now. I'm living my retirement life now, and I have a full-time job.
Well, and that's what you want to do is make sure you're taking care of what really matters most to you. And we did a lot of traveling when the kids were growing up with a camper and so forth, and maybe not even as much as I wanted to, but we still did a lot. spent a lot of time together. Spent some time with my dad with the race car for several years, probably about 10 years doing that. In the last years, he was racing the race car. And just those things that have more meaning to us, in the long run. And I'm very happy that I did a lot of those things, because in the end, just that almighty dollar isn't really it doesn't have any meaning if there's not some other piece to that.
I feel like most people, we have a society that's set up on where you can't think about things too much because you're just so worried about paying for the house, paying for the car, paying for your college, paying for all of this debt that you accumulate in your 20s and 30s. I feel like the best thing you can do from age 18 to age 30 is just like don't go into debt. Or if you do go into debt, make sure it's something that you're going into debt for where the cost of that debt will be much less than what the value of that thing will be worth later.
Yes, yeah.
Such as a house, which is really just a house.
And I mean, it's even with our Airstream travel trailer, it's 36 years old. It's paid for. We're doing some upgrades. I just finished putting new axles underneath it because the torsion system was old, dated, wore out. We're going to put new flooring and a new sofa in it. We're revitalizing it. I'm putting a little bit of money into it, but I'm never going to lose money, or not a significant amount of money on that trailer.
Yeah, and you'll get your use out of it.
Yeah, and that's it. We'll keep it for a long time and just enjoy it. And
I feel like what the trajectory of your life is determined by what you do from age 18 to age 30. Now, there's obviously there's outliers. From if you decide to start a business from age 30 to 40, and that business ends up being something that the public really wants, that can make a huge difference too. But how your finances look in your 60s and your 70s is going to be very much dependent upon what you do in your 20s and your 30s.
Absolutely.
And I cannot stress to people enough that you shouldn't drive the car you drive, especially kids my age. We'll have kids that make $40,000 to $45,000 a year that drive a $50,000 to $60,000 car. Make that make sense to me?
No,
it doesn't make any sense.
Yeah, and unfortunately, a lot of people get caught up in that, and getting your head on straight about what's really important in your younger days, and if you're going to. A lot of times we pick up certain habits from our parents. I think we all picked up. And I think about like my parents and the camping that we did through the years. And, my dad didn't do as much of that growing up as he did with us. And I did with my kids. And now I see, especially my one daughter, they're camping all the time now. Yeah. And so, you hope that's a good thing. And if it's not, if you see your life heading in a path that doesn't give you real internal rewards, then changing that and heading down that next road or tweaking what that looks like is really hard for people, because we are creatures of habit.
Yeah.
So,
well. We could keep blabbering for another 2 hours easily. I know you got to get home and watch the Super Bowl.
Oh, Super Bowl's on tonight.
Who's playing in the Super Bowl?
Well, we got San Francisco 49ers and the Kansas City Chiefs.
Isn't the 49ers the one with Patrick Mahomes?
No, he's with Kansas City Chiefs. Patrick Mahomes and
so he's playing in the Super Bowl.
He's in the Super Bowl, yes.
Okay,
yes.
Gotcha.
Yes,
he's a stud from what I understand, but I don't even keep up with football anymore.
Yeah. He this is about the fourth out of last 5 years he's been in the Super Bowl, something like that. Yeah.
Has he won one yet?
Yes. Okay. They won last year. In fact, no, excuse me. Wait a minute. Was it? No, I'm sorry. I don't remember for sure. They have won at least one. I think two, if I'm not mistaken, under him. And so, of course, San Francisco is pretty impressive, and they got that guy Purdy, Purdy is the quarterback, as they call him, Mr. Insignificant. He was the last draft pick of the NFL draft here a couple of years ago. He makes about $1 million a year. He's one of the lowest paid quarterbacks in the league, and he's kicking butt.
Yes,
And
so the new version of Tom Brady, pretty much.
Exactly.
Awesome.
So,
hopefully, when they rewrite his contract, it's got a lot more zeros behind it. But
yeah. Well, he's tied in for 2 more years, I think, to the one he's on. So,
that's so crazy.
Whether they'll try to make him happy in the meantime, who knows?
That's
so.
insane. But all right, Uncle Keith,
Thank you.
thank you for coming and doing this.
Sure enough, Ryan.
Hopefully,
it's fun as always.
Hopefully, I'll be curious to re-listen to this one when we go to do the next one. We should probably set out to do that in a year or something like that.
Did you do that with this one? Did you listen to the last one we did?
No, because the last one was right after you retired.
Yes, we talked a lot about the retirement.
Yeah. No, I did not listen to it because I don't feel like the way I view retirement has changed, but I feel like that one wasn't as much on the financial landscape as this one was, because that's really what I wanted to talk about on this one. Was like the economy is just so many things right now. Maybe it's just because I'm interested in it and I'm paying attention to it, but there's a lot of people that I feel like are just not doing well.
Just make sure you don't get analysis paralysis.
Yeah, exactly. That's the moral of this podcast. Pay attention to what you're doing. So
absolutely.
All right. Well, thank you for doing this, and
sure enough,
we'll see you on the next one, I guess.
All right. Thank you.
See
Ryan.
ya.
This episode of Somehow We're Adults is over, but if you'd like to support the podcast, you can subscribe to one of the levels of the Patreon, where we will release bonus episodes that can't be found anywhere else. Any of the money that we get from the Patreon would be used to upgrade old equipment, as well as get new gear so that we can make the best podcast for you to tune into. You can also follow the podcast Instagram at Somehow We're Adults, where I share clips and content about the podcast, and the link in the bio will take you to any of the Somehow We're Adults pages. I encourage you to check out another one of the episodes if this is your first time listening, and if you're a repeat listener, thank you for your support. I love making the podcast, and I hope you tune in for future episodes of Somehow We're Adults.